Welcome back to Not Your Mother's Housing Market, the podcast where we dissect and discuss emerging trends in real estate because a 21st century market requires 21st century strategies. I'm Katie Keaton, your Southwest Washington realtor, and I am joined by
Gabby Graves, your local lender with Synergy One Lending.
Yes, hello. We are back. We are really excited, and there's a lot of squirrely energy going on. So today is going to be a fun episode.
Overly caffeinated.
Caffeinated, ready to go.
Yes.
Ready to talk about real estate.
Oh, baby, aren't we always?
Honestly, I always am. We were at our Tuesday meeting. We have a Tuesday networking meeting every week. We've talked about it multiple times. Latip,
For the
shout
pod.
out.
I thought you were talking about our pod meeting. Oh, networking. Okay.
Yes.
Sorry.
I was talking about our Latip meeting, which if you have a business, if you're a local business owner or even a nationwide business owner and you want to grow, look into Latip.
Dollars.
Letip.
Dollars in your pocket.
Mm-hmm. But anyway, every week someone is the speaker, and I was the speaker today. So we had a lengthy conversation about real estate, and Gabby and I just couldn't stop.
Yeah, there's certain times that I know it's just
we like to talk about it.
And when you're passionate about it, it's like all you want to talk about. So when you get in a room with somebody else that has the same interest, it's hard not to talk about work.
Which it's almost like we should start a podcast talking about real estate.
Shouldn't we? I mean, Wayne, help us out.
Look at us go. So today we are talking about down payment assistance. Yes. Basically, this is for you buyers out there who maybe you've heard from your parents, this is not your mother's housing market, but maybe you heard from your parents that you need a 20% down payment to get into a home. That is still an extremely common misconception that I am shocked to hear.
That's in the past. We don't have to do that anymore.
Yes. So we are going to talk about what a down payment is, why banks require a down payment, and how you can get into a home with as little money down as possible. Shall we?
We shall.
Okay.
Where do you want to start?
Why don't you just go ahead and tell us what a down payment is and how it works into the process of a loan and purchasing?
Okay. So a down payment is how much money you are going to use to prepay some equity in the purchase of your home. Mm-hmm. So some loans will not finance the home at 100% value, meaning some loan programs will not have a loan equal to 100% of the appraised value or the purchase price. They want you to pay a little bit of that cost of the home yourself, paying some of your own equity. So for instance, conventional loans start out as low as 3%. FHA loans start out as low as 3.5% for down payment. There's other programs that actually offer 0% down payment.
Mm-hmm. So basically, like if you are purchasing a house, and let's say you're purchasing a house for $400,000, your down payment at 3%, that would be $12,000. So your down payment might be $12,000. That money doesn't just go, it's not like closing costs. It doesn't go to pay people. It really does go to buy down the cost of your home. So if you're buying a $400,000 house and you're putting down a 3% down payment of $12,000, then really your loan is not for $400,000. Your loan is for $388,000.
Yes.
$1,000. We do math here.
We do. And if your purchase price is $400,000 and the home appraises for exactly $400,000, just to make it easy, then your loan to value on your home is not 100%. You're not financing 100% of the cost of your loan. If you do a 3% down payment, you're only financing 97% of the cost of the home.
100 minus 3.
We do math.
We do math.
We math.
We math.
So,
yeah. So that is what a down payment looks like. And it is true that, back in the olden times, 20% was a pretty common down payment number.
Correct. And we touched on a past episode where mortgage insurance made it possible for people to not put down that 20% down payment. Mm-hmm.
So, okay. Why do lenders want people to put down a down payment?
It shows that you have some skin in the game. You have some risk, right? So banks look at risk. They look at what are the odds that I'm going to receive all my money back timely. And so when a buyer has a down payment, and really they look at it like the larger the down payment, the more risk they have or the more skin they have in the game, the more risk there is on their side. So they're going to take it personally. They're going to want to keep making those payments, keep the house up to snuff, keep homeowners insurance on it like they're supposed to. And they're going to treat that home like a prize because they had to pay money to get into it, and they don't want to waste that money.
Mm-hmm. Especially when the down payments were like 20%.
Right.
You can kind of think of it as you're really co-owning the home with the lender. You are business partners when it comes to the venture of owning your home, and the lender wants you to feel that way. They don't want you to feel like, we've all rented a car maybe, and maybe you drive your rental car a little more crazily than you would drive your own car that you'd paid for.
Right.
Or, maybe when you're staying at a vacation rental, which, again, I would never do any of these things. But,
of course not.
Maybe if you're staying at a vacation rental, you weren't as careful as you are with your own home, which, I would say I'm more careful at a vacation rental, but you get the analogy.
But I get the analogy. And, or, I guess more realistic one, our kids. Our kids are not as careful with our belongings because they didn't pay for them. They throw my forks away. I have no forks.
I hate that. We don't have spoons, and I'm just like, where do they go? But then, have you ever swept underneath your couch and you find all of your utensils underneath the couch?
No, that's where I find the socks.
Okay,
I wish I found utensils. That would be nice. But no, I don't. So
my utensils are underneath the couch, and I'm just like, how and why and for what reason?
I spent too much money and time specifically picking out this silverware for my kids to throw it away. But again, soapbox. So
that's a great analogy.
Right.
It's the bank wants you to treat the house like you would treat your stuff, not how your kids treat your stuff.
And have a motivation to pay off the loan, right? So if you have no skin in the game, what is the risk that you might just walk away from the home and not pay it off? And so that's I think why banks, they want to see a down payment, even a higher down payment, because that mitigates a little bit of risk for them. They know that you don't want to walk away from that money that you put down.
But on the flip side of that coin, banks, lenders, the government, they also do want to incentivize people to own homes. They do, there is a good thing, a nice thing that happens in communities where most of the homes are owned by someone instead of, an entire community of renters. Not that that's a bad thing, but, there's a magical thing that happens when there's a lot of home ownership. It is a good thing. So the government, the banks realized just with the way the market was behaving that maybe not everyone could afford that 20%.
Right.
And so kind of the original down payment assistance were those low down payment programs like FHA.
Right. So initially, FHA came out and said that you can have a down payment as low as 3.5%. That was very different from a conventional loan that needed 20%. Then other programs such as VA came about. VA offers a 0% down payment to veterans that qualify. And then USDA came out for homes in rural areas for borrowers that want to purchase in rural areas.
Which is so funny because you used to have to incentivize people to move out into rural areas, and now you almost have to incentivize people to live in towns and cities.
Absolutely. So true. Everyone, at least where we live, people want to go live out in the country.
A great exodus, which I hate because I live in the country and I don't want anyone to move close to me. Even though I'm a realtor, so you'd think that I would want more houses and everything, but I'm like, do it somewhere else.
Yeah, you just don't want neighbors. It makes sense.
But yeah, so those were all ways that people could get into houses for less. Like we mentioned, kind of the original was that FHA loan where, you could put as little as 3.5% down. You had that mortgage insurance that helped the bank feel good about it, gave the bank some security that even if you did walk away from the home, they would still be okay. But with the house prices the way they are, sometimes 3.5 isn't low enough.
It's still a good chunk of change. I mean, to be quite honest, especially, in
this economy.
I was just going to say, in this economy, these gas prices, the price of milk these days.
Yeah, seriously.
Yeah, absolutely. And so that started a new wave, if you will, of what people call DPA or down payment assistance programs, where you can combine the FHA program or the conventional program with a down payment assistance program, maybe provided by your state, maybe provided by a specific lender, where you can have a second loan, if you will, that pays the down payment for you.
So that is a good point. When I talk about the FHA, VA, USDA, those are all primary mortgages. They are
They're loan
primary
programs.
loan. Yes. So when we start talking about down payment assistance, which again is the topic of today's conversation, those are secondary products kind of placed on top. They're supplemental.
Right. So they're what's called a second lien position mortgage. And so if you are participating in a down payment assistance program, you are having this program pay your down payment for you in the form of a second loan. That second loan takes second position, a second lien on your home, meaning that the loan is collateralized against the home, or the home is collateralized against the loan.
Collateral.
Yeah. Anyway, but the point is, it's in second lien position. So that first mortgage would have to be paid off first. The down payment assistance loan would be paid off second in the result of, say, a default if someone were to walk away from the home.
Okay, so I call myself your Southwest Washington realtor. Gabby also works here in Southwest Washington. Of course, her range is a little bit bigger. Lenders have a little bit bigger of a service area than realtors. I'm basically I-5 corridor. If you need something in Olympia down to Vancouver, I've got your back, but I can't do all of Washington, unfortunately. But so really we're going to be talking about if you are a home buyer, you want to purchase a home, maybe you don't have that $12,000 that it would take to buy a $400,000 house. How would you realistically go about that in Washington? What questions would you ask? What programs are typical to use? We're really going to give you some action items and some things to think about today if you are trying to purchase a home in Washington.
Absolutely.
Which Washington is very lucky because we have a great down payment assistance program in our state. So there are some federal programs, and maybe if you don't have a great state program where you live, then a federal program is wonderful. But we are lucky enough that in Washington we have oh my gosh, I keep getting a phone call, you guys. Sorry, okay. I just had to take a phone call. Gabby had to put on some chapstick, but we are back. By the way, the phone call where my booty kept ringing back behind my chair was my son, because we're going swimming after this, and he had to make sure that I brought the goggles. So he called me 3 times in a row.
Oh, yeah.
So that's working mom life for you.
Oh, don't you love that? When you get the 3 phone calls in a row, I'm like, uh-oh, the toaster's on fire. Yeah. The house is burning down. No, it's... Please,
Mom, please bring the goggles.
I need new
when
goggles.
We go swimming.
Yeah.
Anyway, back to down payment assistance. We are lucky enough to have a great down payment assistance program in Washington. So we're going to just kind of going to dive into the different facets. Absolutely. I will say, though, there are so many down payment assistance programs. When we were doing the research for this, I think I saw cited somewhere that there's over 2,000 down payment assistance programs. There is a lot to it. And just like other loan products, like the lender, Gabby, will talk to you, figure out your specific needs, the specific things that make you you, and then can fit you into the program that works best for you. So we're definitely, by all means, not going to cover all of them, but we want to give you a general idea of what most people would go with here in Washington.
Absolutely.
Yeah.
Okay. We'll start out with the... So first, in Washington State, we go through what's known as the Washington State Housing and Finance Commission. They are the ones that deliver our state down payment assistance program. The most commonly used one is called Home Advantage Down Payment Assistance. It's most commonly used because the income limit on it is high enough that it can help a lot of borrowers. So the income limit this year is $180,000 for the application. So however many people are on that application, together your income cannot go over $180,000 a year. This Home Advantage down payment program has a 0% interest rate on this second loan. All payments are deferred for 30 years. So what does that look like? you have your primary mortgage that's in first lien position. This is the mortgage that you're paying on every month, that you make your payment timely every single month. That will have a fixed interest rate. This will be also through Washington State Housing and Finance Commission. Then you have a second loan. That second loan is what pays the down payment for you. That second loan has a 0% interest rate with all payments deferred for 30 years under the Home Advantage Down Payment Assistance Program. So that's a fun way for people to not have to pony up that extra $12,000 that we discussed that are separate from closing costs. To be able to get into the home. What you don't want to forget, though, is that every month when you're making that mortgage payment, you can kind of get excited sometimes seeing that balance tick down. Maybe you're doing some fun home improvement projects and you feel like my home is worth, at least $10,000 more than it used to be worth. And I'm watching this balance go down. You don't want to forget that you do have that second loan sitting out there for that down payment. It's not free money. This isn't a grant. It is truly a second loan that is interest free and all payments deferred until you either sell the home, refinance the home, or
pay off the home.
Pay off the first mortgage over 30 years.
So that is something that I always like to stress to my buyers who are using some sort of down payment assistance because, Gabby works on the buyer side primarily. Right. As a realtor, I see things from the buyer side and I see things from the seller side. So there are times where, someone will be ready to sell their home. We talked about those golden handcuffs before, but, maybe in this case, the home they outgrew it a little faster than they thought they would or something like that. Well, now it's been 3, 4, 5 years since they purchased, and they did kind of forget about that second mortgage because it doesn't show up on that monthly statement where things are ticking down. And so when they're calculating in their mind, okay, how much equity do I have? How much do I have to sell my home for to make it worth it? They can kind of be blindsided when it's like, oh, whoa, you still have to pay that other $12,000 off.
Absolutely.
So it is a conversation just to have where it's like, okay, let's
front.
remember this is not free money. There is no interest on it. It's kind of just hanging out there. But when I do go to sell my home, I am going to have to pay off that second loan on the property.
Absolutely. Yes. And so it's a great vehicle for getting into the home and decreasing the amount of your cash outlay at title, right? So on a typical home purchase, you are required to pay your down payment and the closing costs. Closing costs can range. I've seen them as low as $8,000. I've seen them as high as $12,000 once you factor in, extra fees you may be paying down to buy down your interest rate. And by no means am I quoting rate or fees right now. I'm just giving a blanket range. But when we think,
Gabby's afraid of compliance.
Oh, absolutely. I respect compliance and I love my compliance officers so much.
Me too.
I just want to make them happy with me. Shout out to my compliance officers. We're going to order some swag and we'll get you guys some hats or something.
Ooh, yes. So, like she was saying, it can help you not have to bring so much cash to the closing table.
The example that we gave earlier was on a $400,000 house. If you're going to put a 3% down payment, that's $12,000 by yourself. Well, if we have to have closing costs too,
which potentially again are $12,000, that's $24,000
combined. And so using a down payment assistance program is how you decrease that cash that you have to put up front to get into the home. Amazing. Definitely a program that I personally would utilize to help my family get into a home. With that said, Katie sees the seller side of it, and that when you go to sell your home, once maybe things have changed for whatever reason, both those loans have to be paid off in full and satisfied. And so that can leave you with less net
equity.
Proceeds than you thought you had.
Yes, exactly. I think the times where I really see it as a stumbling block is when someone maybe thought they wanted to be in the house for 5+ years and then they're 2 or 3 years in when they decide that the home is no longer serving them. And then when they go to sell, that's when that second mortgage can really hurt because, you might walk away with about exactly equal. You might not
Right.
walk away with anything.
Especially after fees. There are fees when you sell a home.
Right.
And so it can, yes.
Yes. Which, by the way, so we're talking about cash to close right now. You know, you have your down payment, you have your closing costs. I think in a future episode, we will talk about cash to close and when it actually, you know, all of the fees and what you're actually paying. Gabby said it's too boring, but I think it's interesting.
I think it'll be good. I think we
thing-
should have graphics, though. I think, Wayne, you'll have to come up with, like, some cool, like, artsy-fartsy graphics
we'll be like
for us.
the people, well, except if, well, whatever. Anyway, we're going to be like, look right here. Oh,
Ding.
over here. But I did want to point this out just because, you know, we're saying, oh, your closing cost might be $12,000. There are ways to get around that too. So
Yes.
even if you are a buyer and you have less than $12,000, don't worry. We have some things you can do for that as well. Right now, we're just focusing on that down payment assistance. But give me a call if you want to hear more about how you can lower those closing costs as well.
We just like to tell people that up front because a lot of people, they've heard the phrase down payment, and maybe that you need 20% or whatever.
Right.
And so I always like to cover with people, there is down payment, but there's closing costs too.
Yeah.
So even if you utilize this DPA program, that's only helping you pay down payment a lot of times.
Right.
Sometimes some of it can go towards closing, but not all. So
yeah. So that down payment assistance, in this case, the Washington Bond Program, especially the one she was talking about, you know, you can have a pretty high income and still utilize this because, you know, saving is hard, like we said, in this economy. But just in general, I mean, the average American does not have $12,000 sitting in their bank account. You know, even sometimes when you're a high earner, you don't have that much sitting around. We all like to live to our means.
yes.
So this is a good program because you don't have to be quote unquote low or moderate income to still take advantage of it. But there are some things. So, you know, you're like, okay, what's the downside? Like, sure, yeah, I have to pay it back, whatever. It's a loan. I get that. But it's interest free. It's, you know, I don't have to pay it up front. What is the downside? Well, it can affect your interest rate. Correct? Are interest rates higher? Like if you use a Washington State bond, aren't they a little bit higher than if you use FHA?
Yes, actually. Okay, so if you don't utilize a down payment assistance program, typically the rates that you have access to can be lower if you pay your own down payment. Because that's how the Washington Bond Program, I believe, makes money to be able to lend this money out,
right.
is that they charge a little bit of a higher interest rate than what is offered on the open market.
Okay,
so
your face scared me when I said that, but
I thought you were talking about something else, and so I was like, wait, what? And
Okay.
so no, that was my fault. Sorry.
Okay. Because that is kind of one of the downsides. Like if you were going to, you know, you might have $12,000, $15,000, $100,000 sitting in your bank account.
Right.
And you might be like, okay, well, I'm still going to use Washington State Bond because it's just like, you know, a free down payment. I can keep more of my cash in the bank. But there are some downsides, and that would be that your interest rate is a little bit higher.
Correct. Yes. And there are, you know, there's other stipulations to this program, like there is every program. Credit score requirements, requirements on whether you're a first-time home buyer or not, or are you a home buyer within X amount of years?
Like you haven't owned a home for 3 years or something like that.
And so there's of course eligibility requirements for each program. The one that I quoted earlier, the Home Advantage Down Payment Program, what that does is the second loan that pays the down payment, you can either take it out at 3% or 4%. So you need a 3% down payment because you're going conventional. You could take out the 3% second loan. If you're going FHA and the down payment requirement's 3.5%, you could take out the 4% down payment assistance loan and have that go towards your down payment, and then the little bit of extra, that 0.5%, will be applied to your closing costs.
Gotta love that.
Yes. And so that's one program, and that's the one that has the 0% interest, but also the much higher income limit. Washington Bond's the slang name that everybody calls it, but Washington State Housing and Finance Commission has lots of programs. They offer different niche programs for different groups of people, different areas of where you're buying, say Bellingham or Clark County. So I'm not going to talk about all of them, but another program they have is called the Opportunity Down Payment Assistance Program. And that program is a little bit different in that it does charge 1% interest. All payments are deferred for 30 years. But instead of them giving you a percentage of your down payment, say 3% or 4%, they'll give you up to a max of just $15,000. So you could potentially pay your down payment and maybe a good chunk of your closing costs as well. The one downside to this program is it is much more stifled by income. So there's no income restriction, but the excuse me. I'm speaking about a different program. Excuse me. Rewind, Wayne. There is income restrictions on this program. So if you're a family of 1 to 2 people and you're purchasing in Cowlitz County, the income restriction on this loan program, the Opportunity Down Payment Assistance Program, is $59,150. If you're a family of 3 or more, the annual income restriction is $73,900. So Clark County's restrictions are a little bit higher, but the income limits are much more restrained under this program.
Mm-hmm. So yeah, there are different programs that would work for different people.
Different flavors, if you will. Different flavors.
I'm a strawberry.
Oof, I'm a chocolate girl.
Oh gosh, I hate chocolate ice cream.
What?
I hate chocolate ice cream. I love chocolate as a concept, as a thing. Chocolate bar, sweet, semi-sweet.
But no
dark
chocolate ice cream?
No. And
you haven't had the right one.
No, I hate chocolate ice cream, but this is just a tangent, and I tell everyone, and this is such a tangent, but I don't even care. So when I was pregnant with my son, I love a Frosty from Wendy's.
Oh, okay.
Obsessed with a Frosty from Wendy's. And I hate chocolate ice cream, whatever.
Okay.
I love chocolate Frosties.
Wouldn't call that chocolate ice cream.
No, exactly.
Yeah.
So I used to get one every single day when I was pregnant with my first child because I drove past Wendy's, and so I'm like, oh, whatever, I'm pregnant.
I deserve
have a Frosty
this
every day. So one day I asked my husband to get me one, and most of the time I would say he's not that detail oriented with what I like and what I don't like. He shows up to our apartment with a vanilla Frosty. I cried. He's like, you don't like chocolate ice cream? I'm like, but I love chocolate Frosties. And how dare you get me a vanilla? You're going to show up with a vanilla Frosty to my house?
Oh my gosh.
But they have limited edition strawberry right now for summer.
Ooh,
so good.
We might have to try that. That sounds
so
really good. Little
Let's do a podcast mukbang.
Excuse you?
Oh my gosh.
Oh, what?
No, this is derailed completely.
What
but
did she just say?
I don't understand how Gabby is alive because the amount of internet culture she understands is 0%. The
really?
fact that you don't know what a mukbang is crazy.
No, and
Wayne,
I feel like she's saying a naughty
is.
word right now. Wayne, censor her. Put the little blurb over her mouth. That,
look at my
box.
face. You don't know what a mukbang is?
No, and you're making him blush, Katie.
Oh
Stop saying that.
It is just where you eat a bunch of food in front of the camera.
Oh. That also sounds weird. No. I don't know if our
you know what else
audience is that type
Gabby
of people.
Doesn't know about that again shook to my core. She didn't know who the It's Corn boy was.
No.
She had never heard of It's Corn. She has 4 children. It was ubiquitous.
Ubiquitous.
It was
Katie.
ubiquitous. But I am like constantly online. I'm one of those people. So I understand internet culture unlike these plebeians.
What do you watch, I guess, that brings you up to date with this? Do you watch like YouTube reels?
Yeah.
See, I don't watch YouTube reels. And I think that's where I'm missing out on these like
you don't know what
pop
a mukbang
culture
is. You don't know who the corn child is. Come on.
Still, every time she says that word, I'm like,
mukbang. It's not a bad word.
Oh my goodness.
We're going to get some Frosties and have a podcast mukbang.
Like just okay.
We're not really. I'll eat my Frosties in the privacy of my own car.
Okay, so chocolate ice cream. I want you to try it, and I don't remember who makes it. We need to get back on topic, and I don't remember who makes it, but it's chocolate ice cream with chocolate. Well, of course they're chocolate, but chocolate ice cream with Thin Mint Girl Scout cookies.
Okay, that sounds good.
In it. Oh my gosh, it's so amazing.
I would want a vanilla base with the mint.
So they make that too, but the chocolate is where it's at. And I believe I ate it my entire junior year of college. No. Maybe my whole senior year. I lived across the street from a really great grocery store called Hagen's up north. Anyway, so back to down payment assistance.
Okay, so back down to down payment assistance. You can pick your very own flavor of your DPA. There's so many to choose from.
Yes, there's so many.
You might lactose intolerant. Maybe you need to get a Shinoa. Was that the best like
lead in? Yeah,
Yes.
Shanoa is not offered through Washington State Housing and Finance Commission, but great lead in because that was exactly what we were going to talk about next.
It's almost like I knew that.
She's so good. Yeah, Shanoa. So the Shanoa Fund is
This is for you people who don't live in Washington also.
I was just going to say that. So maybe you don't, and there's other states that have robust down payment assistance programs as well. I've heard that Idaho does. I don't want to stick my foot in my mouth and say one that's not, but I know Idaho does, Washington does, other states do as well. Some states don't. And so Oregon is one that we've heard that does not have any down payment assistance. We love Oregon. But you guys don't have a in-state down payment assistance fund. And so a lot of Oregon residents who want to purchase in Oregon or non-Oregon residents, I shouldn't have said that, anyone that wants to purchase in Oregon and wants to use a down payment assistance program, they would utilize what's called the Shanoa Fund. And it's a national down payment assistance program provided by CBC Mortgage Agency, which is a tribally owned government organization that strives to increase affordability and sustainability in home ownership. Yes, that is straight from their website. So what this does, looking through real quick, it is, again, this is a second loan that pays for the down payment for you. And it's in conjunction with a first mortgage that is also provided through Shanoa. So again, what's the downside? The
higher interest rate.
Higher interest
rate. Say
rate.
it with us.
Yes. And so typically the Shanoa Fund is going to have a higher interest rate on that first mortgage because they're providing you with the opportunity to have a second mortgage at 0% interest, all payments deferred, to pay that down payment for you. So from our understanding, which is where I fumbled before, there is no income restriction on the Shanoa Fund program. So your income can be high, but the interest rate and the pricing on that interest rate of that first mortgage that you're going to be paying on every month is dependent on your income. So essentially, it is more needs based. When you are low income or moderate income, you're going to receive potentially not as high of an interest rate as someone who has higher income when utilizing the Shanoa Fund.
Tell them about that cool thing we learned about the Shanoa Fund, though.
Oh, this is really cool. So from what we read on their website, if you utilize their 3.5% down payment assistance second loan, as long as you make all payments on time for 36 months, you have no 30-day lates in 36 months, and you can prove it through
however you prove it.
Whatever, bank statements, whatever, payment history. The second loan will be deferred and canceled. So it turns from a loan to a grant, essentially.
Yeah, or
it's completely forgiven. The loan is completely forgiven. Now that's for the 3.5%, and that's 36 months of on-time payments. If you utilize Shanoa's 5% down payment program, then you have to make on-time payments for 120 months. So 10 years, you would need to make your full on-time payments. It said you can never have a 60-day late in that period, or it would void the eligibility for
forgiveness.
For forgiveness. Thank you.
Forgiveness, yes.
Yes.
Okay, so that's pretty cool.
Very cool.
Basically, there are a lot of different down payment assistance programs. And,
there are.
You
a lot of different flavors.
Work with a lender that can fit you into the one that's right for you. And so we've been talking about, federal down payment assistance programs, statewide down payment assistance programs, but there are lenders that also offer their own down payment assistance programs as well.
Yeah, absolutely. So, and real quick, back to what Katie was saying about the different flavors. It all depends first what you qualify for, right? So you might not qualify for all these programs. There's like 2,000 potential different down payment assistance programs, but you might only qualify for
5.
Yeah, exactly. And out of those 5, what your loan officer is going to help you figure out is what one best fits your needs and which is the smarter way to go. So a lot of the things we look at is, well, what's the interest rate on that second loan? Are the payments deferred? Just different aspects. What are the fees on that? How high will the interest rate be on the first mortgage, which is the mortgage you're paying on every month? And so we compare and contrast those different things to figure out, what's the smartest move for the borrower. back to what Katie said, different lenders do have different down payment assistance, like in-house down payment assistance programs. At Synergy One Lending, we do have our own in-house down payment assistance program, and it is called, let me pull up my
Synergy
flyer.
One Down Payment Assistance Program. No.
It is called the First Advantage by Synergy One Lending, and it's an FHA down payment assistance program. Synergy One Lending offers assistance to home buyers with down payment assistance up to 3.5% of the sales price or appraised value. So we are willing to finance the home up to 100%. The minimum credit score is 600. This is
That's good.
This is eligible for single family homes. 2 units, so a duplex, condos, manufactured homes. The down payment assistance can be used for down payment and or closing costs. So maybe you're going to throw in a little smidge of your own down payment in there or something. Utilize this. The extra could go towards closing. Loan amount, or excuse me, I misspoke. No first-time home buyer requirement on this program, which is really cool. So if you have more questions about this, shoot me a call. I would love to research this and dive into this with you and figure out if it meets your needs. One thing about this program is it is not offered in every state. Let's see here. So certain states with robust down payment assistance programs already, you can't use the Synergy product in those states. So Washington, Massachusetts, New York, and Kentucky, apparently we are not allowed to do the Synergy One down payment assistance program. But if you're an Oregon resident, this might be a great opportunity.
Are you licensed in Oregon?
I am licensed in Oregon. I am.
I am not. I need to work on that.
Let's do that. Goals. We'll put that on the goals list.
I need to work on it.
I want to get licensed in Arizona, possibly. I feel like a lot of people want to buy in Arizona.
That makes sense.
Anyhow, this might be a good option for Oregon residents, and we can compare this to Shinoa and see what is a better option for you.
Yeah, really, that is the moral of this story is we want to help you get into a house. If it makes sense, financial sense for you to get into a house, if that is your goal, then we absolutely want to do what we can to help you. And a huge barrier to home ownership is having to save up that large down payment. So
Absolutely.
There are different avenues that we can go down to work with you on that. Do not listen to your grandma who told you that you have to put 20% down on a home. No offense, grandma.
Those days are gone.
Those days are gone. We can help you. We can get you in for a lot less. And honestly, sometimes even cheaper than you can get into a rental. It is crazy, but it is true. So if you are interested in home ownership, you want to purchase a home, give us a call because we would love to help you find your flavor.
Absolutely.
Yes. With that, don't forget to follow us on Instagram, Facebook. Check out our YouTube channel. That is where all of these are living for now. Yes. We will figure out the podcast side of things.
Subscribe to our YouTube channel. That would be awesome.
Subscribe.
Subscribe,
Everything,
share, all the things.
Yes. Everything is Not Your Mother's Housing Market. Very easy.
Yes.
Follow us on Facebook, Instagram, YouTube. But I know for both of us, messages work great. Our phone numbers are everywhere.
Right. Or even more than questions. Katie and I are kicking around the idea of doing a nightmares story episode, maybe nightmare inspections, nightmare appraisals. We'd love to hear
your horror stories, real estate horror stories.
Yeah, exactly. So if you want to shoot us something funny, we will keep you anonymous.
Yes, very good point.
Okay.
Well, with that, thank you so much for watching this episode of Not Your Mother's Housing Market, and we will see you next time.
Have a great day, guys.